if anyone comes to me and says, listen, I'm looking for a deal, these are the numbers they should be looking at, and this is the segment you should be looking at to invest your money. Hi everyone, and welcome to Reality Check, where we'll discuss what's happening in Toronto real estate market, where it's going, and help you make informed decision buying or selling real estate. My name is Nima, and we're here, and we're gonna talk about what happened in October. We just had a rate increase actually, 0.5. I mean, they keep on raising their rates, and as to what's happening with the sales and prices, that's where we're here to find out what's going on after all these rate increases. So let's start with the market watch, this first segment. But before we do that, make sure to hit that like button, subscribe, and share it with anyone you think that would find this useful. So let's start with the average sale price. We're actually inched up this month by about 0.2%. We're at $1,089,000. I want to just start with where, again, we started at over 1.35 million. We bottomed at around $1,074,000 back in July. And since July, we've been inching up. I would say we found the bottom so far. And with all these rate increases, we haven't been able to really push the prices down further than what it was back in July. So let's see in terms of sales. So the sales are sitting just over 4,900. We're below 5,000. We've been hovering around 5,000 since August. So the sales haven't really, improved. And since last year, we're actually down by about 50%. In terms of active listings, well, they're up about 68% since last year, and we're hovering around the 13,000 mark. And as we can see here, we've been hovering around the 13,000 mark again since August. This is actually a good thing because if we're not seeing a huge spike in the amount of inventory that is on the market, we're not gonna see a huge price drop. And this is why the prices are kind of holding off, because the inventory on the market hasn't been spiking. And we're gonna go in depth through that and compare it to what happened back in 2017 and 2008 that led to prices actually decline drastically. So in terms of months of inventory, we're hovering around 2.63%. We're gonna cover that later on as well. But one thing I really wanna mention is the fact that the days on the market is hovering around 21 days. Last year, this time it was about 13 days. And that's when we were seeing all those multiple offers. But again, last year, we were below 1 month of inventory, and that's why everything was heading to where it was with the prices. So, average prices, what do we see here right now? So we see on the dot chart, we see all the 4 dots that were out of whack and gradually came down. We have it right here at around February, March, April, May, and in July, we had the lowest one of them all. And from there on, we've had 4 dots that have been almost in the same level. We've been gradually increasing, but that's why kind of called it about 2 months ago that I felt like we found the bottom in or around August, and that, as we can see, July was the lowest. And since then, we have been increasing the average prices month over month slightly, but that's a good sign because with all the rate increases that we've had, and we've had quite a bit since July, we've had about 2.25% rate increase since July. And with all of that, we haven't really had lower price points. So that goes to show there is good demand at this price point that the prices are kind of supporting and leveling off, and there's no more push towards lowering the prices. One thing I really like to compare month over month is what's happening in different areas. Let's talk about Toronto, let's talk about York, and let's talk about different segments in each market. Let's say detached, condo, semis, and towns. So I want to start with the Toronto prices. So keep in mind, the average price for all types of housing is sitting at $1,089,000. So the detached market is actually higher. So we're at $1,609,000. Previously, in last month, we were at $1,585,000. So we are up by about $30,000 in the detached segment in Toronto. In terms of semi, we're up as well from 1,210,000 to 1,219,000. Townhome is drastically up higher. We're up about 1.5%, I would say, because we were at $943,000 average price for towns. Now we're just over $1 million at $1,003,000. But one thing that's worth mentioning in Toronto is that the condos have actually declined in terms of their average pricing. So the condos in Toronto declined by about $30,000. Previously, they were sitting at $770,000 back in September. Now they're down to $740,000. So I really want to break this up, and we're going to talk about it in a little bit after this segment when talking about micro markets. And I will tell you exactly why we see condo prices right now lower than everything else in Toronto. Well, we're talking about the average prices. Let's talk about what's going on in the detached, semi, and town in York region. So the detached prices in York region have actually fallen down lower to $1,289,000 from $1,310,000. The semi went up from $950,000 to $970,000. Reason being, there is a lack of inventory of semis in York region, and that's a product below $1 million that is affordable. Townhomes have actually stayed kind of flat at $895,000, and condos in York region have actually increased in price by about $15,000 from $655,000 to $670,000. So let's talk about the micro market and the opportunities. I was talking about the condos in Toronto, why the prices actually went down. So I have a little chart here that I want to bring to your attention, and this is to essentially show what has happened across the board in condo market, especially in CO1. CO1 is the downtown core that I want to really bring to everyone's attention, because back in February of 2020, there was a frenzy. There was multiple offers happening in every condo building in downtown Toronto. We had about 1.1 months of inventory, and that's why we see a sharp increase in prices. So the average price back in February of 2020, pre-pandemic, was $840,000 for condos. In October 2020, we had a huge decline in the price of condos, and they were just about to come back up again. The prices had dipped down to $755,000, so almost about $85,000 drop in the price of condos. And the months of inventory for the condos was over 5.4 months of inventory. This is buyer's market, and this is why the prices actually drop. Now fast forward to the October of 2022. What has happened right now? The reason we see condo prices declining in Toronto is because of these numbers. Sales are down. We're at 181 sales. Listings are up to the point of the active listings are over 800. So the months of inventory for condos in downtown Toronto is sitting over 4 months. We're at 4.46, 4.5 months of inventory, which puts us exactly in the buyer's market. And this is why we see prices not appreciating as opposed to all the other segments of the market in Toronto appreciating. So with that being said, this is where people should be paying attention to. If anyone comes to me and says, listen, I'm looking for a deal, these are the numbers they should be looking at, and this is the segment you should be looking at to invest your money. I mean, there are condos out there for $500,000 to $600,000, and you can easily get a rent of $2,500 right now in this market. The rents are going up, the prices of condos are coming down. So if anyone comes and says, listen, I'm looking for a deal, that's where you can find it. You should be looking at these numbers. So the months of inventory, if you're anywhere over 4, be sure to look in those markets for the deals. Look at the rental rates. See if the rental rates are supporting the demand for that market. So if the rents are there, you should be buying there because it could cover a good chunk of your mortgage, and you could either be cash flow neutral at the purchase or cash flow positive. So far, we've done good, Nick. What do you think?
Pretty good.
Good stuff. Months of inventory. So we've talked about months of inventory overall. I have the graph. I just want to, again, bring back what I said about 2 months ago and exactly last month, that I don't think we're going to see a spike in the months of inventory. I don't think we're going to see over 3 months of inventory, at least this year. Maybe in December we will see it. But right now, as we can see, last month the months of inventory was about 2.69. Right now we're down to 2.63. We're hovering below the 3. We're still in the seller's market. And with that being said, I just want to go through a bunch of areas in GTA and let you know what's happening in each area with their months of inventory. So overall GTA, 2.63 months of inventory. Toronto, we're 2.83 months of inventory. Then we go down to Mississauga, 2.67 months of inventory. Again, these are all sellers market. Brampton, things are a little bit even hotter, 2.2 months of inventory. We mentioned that last time. We've seen multiple offers happening in Brampton. Durham region, same thing. It's pretty hot right now, and that's, I would say, one of the markets that's got the lowest months of inventory. That's below 2 months. We're at 1.73. York region is at 2.6. And the only region that I would say there are good opportunities if you're buying detached or any type of home would be Oakville, because we're over 3 months of inventory. So if you're looking to get a deal, you shouldn't be looking in Durham right now. I mean, you may find it here and there, but where you should be focusing your attention is in Oakville, where you're at 3 months of inventory. So the reason we don't see prices dropping lower than what it is something I like to call shadow demand, which is people looking for deals. So once the prices are hitting a certain level, people are in the market looking for deals and they will grab them. And that's why you should be in the market if you're buying to see these deals to purchase. Also, for sellers, if you're putting your house on the market to sell, you gotta look at what's on the market, what's been sold, and be realistic with the prices. And the reason right now we don't see sharp increase in the inventory levels is because whoever was on the market that didn't get their price, they're taking their inventory off the market. And those that are on the market are the ones that are actually transacting and have realistic expectation for their sell price. Let's go to the news and see what's happening there. We had a few important news to talk about. First of all was the fact, what I really liked was, as soon as the stats came out, instead of putting a negative spin on it, a lot of outlets, for example, Toronto Star, they actually said GTA home prices climbed 0.2% to $1,090,000. That's up 0.2%. That's about $2,600, almost, let's say $3,000 from the month before. But it's still down 5.7% from last year, right? They could have just said prices are down 5.7% and everyone would have panicked. And the reason I'm bringing this up is, fast forward to next year, January and February, people will see double-digit decline in the stats. And that's going to be on the headline, and people are going to panic. But they should not, because this is all noise. You should cut through the noise. We've already seen the drop, right? February comes, you see 20% drop in prices, don't panic. We expected that, right? Use the opportunity, be out there, and keep in mind, if you even bought back in February, if you're not selling right now, you haven't had a loss. If you're in your house, there is no loss. If you sell your house, then there's a loss. Right now, you're not selling. So if you're in the house long term, then you shouldn't even panic about the fact that the market has come down. And keep in mind, the prices are lower right now artificially, just how they were up artificially due to low interest rates. Right now, these interest rates are high and they're gonna keep on rising just to bring inflation in line so that, nothing goes out of control. So again, make sure when you see these headlines, don't panic. The second news I want to talk about is the fact Canada is welcoming 1.4 million immigrants in the next 3 years. So Canada actually revised the immigration policy. And I think in 2020, they had over 400,000 people that came. Next year, 2023, they're expecting 465,000. 2024, 485. And by 2025, 500,000 people they're expecting to come to Canada, mostly skilled workers. Where do these people gonna live? I mean, keep in mind again, right now, because of the interest rates, a lot of builders are not building. A lot of people that were looking to apply or buy property, infill developments, are not buying them. So the inventory is gonna be restricted in the coming years. The demand is already there, and the pent-up demand is just gonna be exactly like what happened back in 2020 when the pandemic happened. For 3 months, no one bought, and everyone, went crazy and started buying. So we're gonna see that again. But imagine right now, at the level we're about 5,000 sales. We should be at about 7,800 to 8,000 sales, so about 3,000 lower than the historic average. For the next 10 months, if we keep on going like this, we're gonna have about 30, 40,000 people that didn't buy that they need to buy. And next year, as soon as the interest rates come down, these people come back in the market, plus the new immigrants. You do the math, what's gonna happen to the prices. So that's one article. The link is gonna be in the description below. And the last article that I wanna really talk about is about an article that came out by Urban Nation talking about how pre-construction sales plummeted 79% in the third quarter. A lot of these developers were selling condos, the prices of condos kind of skyrocketed due to the fact that the raw material shortage was happening because of COVID. So the price per square foot cost of construction was up higher. So when interest rates rose, people saw there are better deals to buy as resale. So this article talks about pre-construction sales plunged 79% year over year in the third quarter because of the interest rate hikes. It also says that 67% of the developments, about 189 projects that were available to sell units, didn't sell a single unit. Again, this is why some of the builders that are selling have great promotions. So if you're in the market to buy pre-construction because you can't get a mortgage approval or you don't have the down payment, there are deals in the pre-construction segments that you can buy. And remember, last time we mentioned, if there are deals out there that requires you only 5% deposit, and some of them don't even have development charges, they waive them all. So I hope you guys enjoyed the episode. We didn't have Devaney today, and I think we did that in one take almost. So hope you guys enjoyed it. Make sure to hit the like button, share with your friends, and subscribe so you get notified anytime we put out any content. Have a great day and see you next month.